Thank you, Chamber of Tax Consultants, for giving us this wonderful opportunity to be part of Gyanshorts. It's a wonderful initiative of small slides for a particular topic. I, 𝐆𝐲𝐚𝐧𝐒𝐡𝐨𝐭𝐬, a practicing chartered accountant since last 4 decades. With me, my partner 𝐆𝐲𝐚𝐧𝐒𝐴, chartered accountant, joining to explain in detail about filing of income tax returns. Yes, Jyoti, let's start.
Thank you, sir. Sir, as it's ITR season, and honestly, with every passing year, we feel there's so much to remember. So just before beginning, just want you to throw a light upon where do we actually start this ITR filing from?
So before filing return, we need some preparation. We need to file certain documents to be very particular. For example, if somebody is choosing to change the tax regime from new to old or old to new, he has to file Form 10IEA, in particular if he is carrying on business or profession. In case of companies, this year MAT credit will not be allowed to be carried forward. So companies may choose for opting section 115BAA if they are not opted in earlier year. In that case, they need to file Form 10IC. This is for opting for change of tax regime. Similarly, for audit cases, they need to file Form 3CA, 3CD or 3CB, 3CD. In case of transfer pricing cases with international transaction or domestic transaction audits, they need to file Form 3CEB. There are so many other forms also for international companies or taxations of companies which are falling under international taxation, for advanced pricing agreement, for safe harbor rules such as Form 3CED, 3CEFA, 3CEAA, 3CEAB. There are various forms. Similarly, a charitable trust is required to file tax audit kind of forms in Form 10B or 10BB. This all has to be filed 1 month before filing the return. So normally the due date is 30th September. In addition, also certain other forms to be filed. For example, companies paying MAT, they need to file Form 29B. Companies or SSCs claiming foreign tax credit need to file Form 67. Those SSCs who are claiming deduction for paying rent under Section 80GG, they need to file Form 10BA. Similarly, several other forms for disability certificate, 80U, 80DD, for 89 relief, for deduction claiming under Section 80JJAA, 80ISC, 80IB, various different forms like 10CCB, 10DA, etc. have to be filed before filing return of income. In some cases, they have to be filed almost 1 month before filing the return. So one need to be very particular before filing the return that these all forms have been duly filed in due course of time.
Okay, so forms checked. Now we go, do we just pick the numbers and file the return, or there should be some reconciliation to be made? So
nowadays things have changed drastically. Income tax department is providing you so many information in Form 16, 26 AS, AIS, TIS. You need to download them, reconcile with your data and see that all the informations have been duly reconciled. In case there are some discrepancies in AIS, TIS, duplicate transactions, etc., you need to report to income tax portal that there are certain mistakes in those forms. And before filing the return, you be assured that all the informations matches or reconciles with this kind of forms.
Okay, so we just match the figures and then go for filing. Okay, going ahead, the most critical one, which ITR for whom? A biggest confusion, a biggest big time error where people make it out. So firstly, we'll begin with which SSC who does not have a business income, which ITR form should be filed by them?
So normal form would be ITR 2 for all SSCs who don't have business income. But the people who are having only salary income, income from house property only from 2 houses, agriculture income up to rupees 5,000, capital gains income up to rupees 1,25,000, they can choose to go for ITR 1, which is very simple. But the people who are directors in a company, who have shares in a private limited company, who have capital gains from land or building, they cannot opt for 1. So generally Form 2, but in some cases resident individuals having very limited sort of income from salary from this up to a sum of 50 lakh can choose Form 1.
Okay. And what about the persons having income from business and professions?
So in case of business and profession, again there is one form, SUGAM form known as ITR 4, which can be filed by individuals, HUFs, partnership firm, but domestic only.
Okay.
If they have income from profession or from business under presumptive tax 44AD, 44AE, 44ADA, they can choose SUGAM form ITR 4. Again, they should not have income from capital gains more than 1.25 lakhs, etc. But otherwise, ITR 3 is the normal for the people who are having business income. They should choose for ITR 3.
Okay, so we covered out individual HUF ITR 1 and 2, then we covered out ITR 3 and 4. And now what about the entities who are non-business entities and non-corporate entities?
So for NGOs, charitable trust, Section 8 companies, etc., they need to use ITR 7, companies ITR 6, and all other partnership firm, LLP, AOP, family trust, they need to go for ITR 5.
Okay, so before we move on, like we have covered with the ITR forms that needs to be selected, any other details that is to be specifically taken care of while feeding the return itself? So what the person should not miss about it?
Yes, very important, because if the return forms are not fully properly filled up, they may become having some problems, invalidate or some other problem. So what is important is that this year they have put a lot of more requirements for the person, particularly those who are filing under old tax regime. They need to submit so many details. In general, all bank accounts have to be given, one account for refund. This year they have also added, you can give 2 addresses, primary address and secondary address. In case somebody has gone for capital gain account scheme, so many informations have to be given about the bank, where it is maintained, how much balance, etc. If somebody is claiming interest on borrowed capital against self-occupied property or rented property, certain specified details have to be given. Similarly, people who are claiming deduction under Section 80E, interest on education loan, or 80D, 80EE, 80EB, 80GGC, they also need to give certain specified details given in the form. More important, in TDS schedule, you have to also intimate what kind of income, where this income have been reflected, which TDS is shown. In case your income exceeds 1 crore rupees, you need to file all the assets and liabilities detail. In case you are a director of a company, you need to give details of those companies. If you hold unlisted shares, you need to give details thereof. In case you have foreign assets, foreign liabilities, or foreign bank account, these details have also to be given in the return while filing. Thank you.
So we have done with feeding, we have done with filing. Now we go for verifying the return. So we need to get it verified, right? So what are the various modes that can be used to verify the ITR?
So most important generally used is Aadhaar OTP, then digital signature, net banking, electronic verification of codes through a bank account or demat account, and lastly physical verification.
Okay, so the physical verification is the to be sent to the CPC Bangalore, right? Okay, going ahead, what are the types of return? Because I have heard and I know that on time and late aren't the only two. There are various categories of returns.
So one important thing is that the returns have to be filed by people who are having transfer pricing audits 30th November, the people who are having tax audit 31st October, people who are having business income 31st August, and others have to file return by 31st July.
Okay, and what if someone misses the due date for filing the return?
The life becomes difficult. You cannot carry forward business losses. You cannot carry forward capital gains losses. You will also facing difficulty in claiming deduction under section 80IB, 80IAC, 80P2D. Though tribunals take decision that delay is just a procedural lapse can be condoned, but there are a lot of litigations involved. You will also be liable for paying interest under section 234A, and you cannot opt for old tax regime.
Okay, so even after the due date, can the return still be filed? And what if some mistake has been happened while filing the return? Can it be revised?
So belated return can be filed under section 139(4) with payment of additional fees of rupees 1,000 to 5,000 depending on your income. These returns can be filed up to 31st December. In case there are some mistakes or errors have happened while filing the original return, you can revise the same by 31st March. But if you are revising the return after 31st December between January to March, here again you have to pay additional fees of 1,000 to 5,000 depending upon your return.
Okay. And what about the term updated return, wherein a longer window is being provided to the SSE for filing the return?
So if a person has committed some error or omission while filing the return or has completely missed the return, he can still file the return within 48 months from the end of the assessment year, or to say it differently, within 60 months from the end of tax year. For assessment year 22-23, return can be updated by 31st March 27. You have to pay additional amount, like whatever tax payable plus interest payable. Additional to that, 25% to 70% depending on the year in which you are filing the updated return. In case a notice under section 148 is received, still you can file the return within the due date prescribed under notice under section 148, but you have to pay 10% extra in case the updated return is filed after receiving of the notice.
Okay, so an opportunity has given to the SSE to file the return before completing the procedure. Okay, going ahead, are there any situation wherein updated return can't simply be filed?
You cannot file updated return for declaring loss, for claiming refund, for reducing your tax liability, where search, survey or requisition has happened. This all is not permissible. But of late, from this year, they have permitted to file a updated return to reduce carry forward loss, depreciation or reduce tax credits.
And the last one, what is the deadline for filing the returns in response to the notice that has been received under section 148?
A return can be filed in response to notice under section 148 within 3 months, from the end of 3 months from the month in which the notice under section 148 is received. So from the end of the month in which notice is received, within 3 months you can file a return under section 148. Thank you.
Okay. Thank you so much, sir. That's actually a lot clearer now. So in line, firstly we check the mandatory forms whether they have been filed or not. Then reconcile our data with form 16, 26 AIS, AIS, TIS that has been uploaded by the government authorities. Pick the right ITR as discussed from ITR 1 to ITR 7. File it, verify it within a month and know exactly which type of return applies to you.
Thank you
so much.
Thank you so much.